Hi, everyone. It's Blaine Bertsch, CEO at Dryrun. Again, joining me today is Melissa Diaz with High Rock Accounting. We have our periodic talks about what's happening in the business world and how we can help business owners move forward with your business. We were just talking right before we get on here. Of course, we're getting into late September. We're getting at the end of Q3. And so we were just chatting about what are businesses facing today, and what are some of the things that are top of mind that they got to really deal with right now?
Yeah, absolutely. So, right now we're heading into Q4, which means tax planning time. A lot of times, we get to the end of the year and clients come to us and they go, oh, great, I was really profitable this year. Or perhaps I'm operating at a loss. I'm cannabis industry, but I have all this phantom income. What do I do? Well, when you come to us at year end, we're limited at what we can do at that point. So right now is actually when you want to be having those conversations with your tax accountant, looking at your cash flow, projecting through year end. And it's important to note if you are reporting on a cash basis or an accrual basis for tax purposes, because that's going to have a big impact on what we can and can't do for you.
I can't believe I'm going to say this, but I've rarely heard an accountant say at the end of Q3 that we should start looking at year end. It's so obvious when you explain it that way that if you are not planning now, like right now, you basically still have a quarter to figure out what you need to do, what you can do. Should you be spending? Should you be cutting back? What are the different opportunities? Makes perfect sense. And too often we do hear it's like after the end of Q4. Well, yeah. I guess we should start talking about it. And I know it's because we have the same philosophy of being proactive, looking forward, and trying to predict where a company goes and take advantage of things, not look back. Hindsight's 2020, right?
And that's why Dryrun is so useful, why we love it as a tool. But I had a great example. I was actually just talking to a client, again, cannabis industry, which is what Rebel Rock, our firm, specializes in. We got High Rock, Rebel Rock. High Rock just is the traditional facing. And turns out that, some of their tax planning strategies, they are one of the one-offs in cannabis right now that's actually really profitable. And that's a problem. And so the advice that came from one of their tax accountants was, well, go buy some assets. Well, what kind of assets do you buy? And not all assets are created equal. Some assets are allowed to have bonus depreciation. Some have accelerated depreciation. Some you have to take straight line. And I'm sure, as you know, in cannabis, we are very limited, right, at the type and time period over which we can take deductions for depreciation, unless you've played that whole management game, real estate game, all of that to try to optimize those deductions. But now would be the time, if you need to try to figure out how you're going to address some of your profits, now would be the time to talk to your accountant. And how do you know if you're profitable, right? Well, using a tool like Dryrun really helps to decide where you're going to be at year end.
Yeah, I remember back in my creative agency days, I had an agency for over a decade, and we would find out, 3 months after year end, how we did the year before. And it was, it was like trivia, almost like, okay, well, that's fine. But what are we doing now? What are we doing in the next 3 months? And I know that the world, like we're talking with businesses every day, it's still, all I can say is it's weird. It's
weird.
Just very...
Stuff is weird right now. Yes.
It's volatile. Some businesses are struggling mightily. Some businesses are actually killing it, but it's been so up and down that they're still nervous about, like, do we actually take a leap? Is it false, or is it actually going to continue like this? I was on a call just a little while ago, and they were telling me about how many of the tech startups that were well funded through 2021 are zombie companies, zombie businesses. He said they can't get another round because they were valued too high. But they still have some cash in the bank, and a lot of them are just on a dead end walk until they blow through the cash. And man, that is a frightening place to be. If you are a zombie company, to me, it's like you shouldn't be treated as a zombie company. If you're cutting costs fast enough and you start looking at where your opportunities are, you might be able to right the ship. Not with extreme growth. You're not going to get a VC wanting to write you a check, but maybe there's some potential to play a bit of a longer game. So
exactly to that point too, real quick. So that's a really good example also that perhaps up until this point, or maybe up until Q2, you were a profitable company. Should you pay your estimated quarterly taxes? Well, if you're looking at, hey, we've got runway of maybe another 3 months and we know more cash is not going to come in, maybe we delay payment of those estimated quarterly payments, because the interest rate that the IRS is going to charge you is going to be far less than potentially missing out on some opportunity you could use that cash for.
Yeah, it's a great example. I remember one of our customers telling me, Guy Bauer with, and you can actually listen to him. It was literally on one of our podcasts when he was talking about it. And he said they had a period where, and just over the last few years here, again, it was just a weird segment, and they were so slow for about 6 months. And he said he was always in looking, where are we going? How long is our cash going to last? Making those adjustments. And then suddenly it just lit on fire. And he said, imagine if we hadn't been managing that so that we could hang in long enough for the windfall. And that's what he called it, because he said it was just like nursing along, and all of a sudden it's like the light switch turned on. And there's part of it is just hanging in long enough so you can see what opportunities might be available, right?
Absolutely. Completely agree with you. And again, I'm going to plug again, Dryrun, great tool for that. That's a great tool to also model out, should we pay our estimated quarterlies, or is it better to utilize that cash perhaps for some other purpose in the short term? Yeah,
absolutely. Well, thank you so much. And I do want to say, again, not all, and I'm probably ruffle some feathers here, not all CPAs are created equal. And I will say over and over again, go talk with Melissa at High Rock, because you need someone that is forward looking, and like this in advance, 3 months ahead of time. How can you best use your cash flow, what's happening in your business, rather than looking back at the end and telling you what happened? And the advantage for a business that's forward looking is pretty dramatic. So
yes, absolutely.
Come and talk with Melissa at High Rock Accounting. And if you're in cannabis industry, Rebel Rock actually specializes, and we all know how complicated and volatile that industry can be. Come and talk with Melissa. And of course, if you're looking for a tool that can help you predict where your cash flow is going, where your sales pipeline is going, model scenarios, understand what's happening in your business, come and visit us at dryrun.com.